Can everybody hear me now? Everything I said before didn't matter. I just gave away the secret on how to make $1 million in 2 days. So if you'd been here in live, you'd have got that. You guys online, sorry you didn't hear that. So anyways, I'm Kenny Leonard. I'm the broker and owner of Away Real Estate. This is Angela Horton. She is the absolute best closing person on the planet, Title Quest. I've been using them for a while. They're an amazing company. If you haven't used them, please give them a try, give them a shout out. So before we get started, I do have a trivia question. As you don't know me, and the agents that are at Away Real Estate are not allowed to answer this question. But for those of you who don't know me, I am absolutely, I live and breathe the real estate contract that we have. I dive into every corner and aspect of it because I found out a while back that most agents get somebody under contract and then they just start off on their own path of how they think it should go and what they think should be done. And my agents will tell you, they come to me with a problem. The first thing I ask them is, what's the contract say? Because that contract is really your road path to getting to the end. There should be no arguments, right? Shouldn't have anything. So I have a contract question for you today. We have some things we're going to give away from it. There's a Starbucks gift card involved and some other things. So here's the question. Who, and don't just shout it out, raise your hand, please. If you're online, type your answer in. There can be more than one winner on this. Who is responsible for paying the reinspection fee for an appraisal?
Buyer.
Okay. Seller. What do you got online?
Oh.
Nothing yet.
See it. You want the video one or not?
That's okay. Just leave it as
Seller. Deanna says seller, Annette says seller.
Okay, now, who can tell me where in the contract it says that? Without looking it up. You tell those guys online, don't you be looking that up now. Don't be cheating because you're online. Does anybody know in the contract where it actually spells out who is responsible for it? Because this is an argument we get all the time, right?
Somewhere on page 3.
So he says somewhere on page 3. That's probably close.
Page 1 at the end.
So the percent between page 1 and end, that's not going to be close enough for a prize.
In the appraisal section.
In the appraisal section, right? So we're getting a lot of different answers, right? So we're just going to let that. So anybody want to try to tell me where it's at? Anybody know? Paragraph? Anybody know the paragraph? Well, can you just tell me the name? You don't have to tell me the number, just the name of the paragraph. So I got the cat part.
Am I still not allowed to say it?
No, you're not allowed to say it. You work at Away Real Estate. I know you better know this. You say it and it's wrong, you're in trouble. Somebody else said the appraisal section.
Amber said the appraisal section, yes.
So we get this argument all the time, right? An appraiser says I have to go back out and do a reinspect, and then there's a reinspect fee, and there's this argument about who's going to pay it.
And not in the contract.
What's that?
Not in the contract.
Someone says not in the contract. It is in the contract. And I'm gonna, nobody's gotten this right yet.
Paragraph
10. He did it. That's a good guess.
It's paragraph 4 under settlement expenses. It states in the top 3 lines exactly what a buyer and a seller are responsible for. And what's really amazing about it is, you know how we always argue about the seller has to pay any fees required by the VA that the buyer cannot by law pay? It actually says in the contract that if there is a fee required by the lender for the loan that the buyer cannot pay by law, seller has to pay it. So it's in our contract. And this is things that are in our contract that we don't really pay attention to, that we should, right? So I'll bring all of this up. Do we have any winners at all?
What was the answer?
Oh, seller, paragraph, it's seller's responsible, paragraph 4, settlement expenses.
Did they have to get all of them right?
Well,
You didn't get it.
no, we can get half of them right. But I think it is on page 3. I think it is on page 3, Mark. So here you go, bud. Have enough coffee over there. Guys, this is Kerry Williams from Atlantic Bay Mortgage. I got the whole family here today. All right, so I've taken up enough time, but I thought that was some really important bit of information. So without further ado, Mike, I'm going to turn it over to him, and he's going to go over all this great new information that the state keeps putting on us.
Yeah, and
And
what
if you haven't got a sandwich, please come up and get one.
Oh, yeah, please.
and what the federal government has put on us. So a lot of changes. Let me make sure this is working.
Don't be afraid to come up here because this food is delicious. It's from the cutting edge
Yes.
Drove it all the way here from Battlefield Boulevard. It's some freaking amazing food.
What's the name of the restaurant?
The Cutting Edge. It's so good. You're welcome. Sorry. I heard a voice. I heard a voice. Didn't know where it came from. I really have. Sorry. I'll sit it on your seat. Reno, is that kind of thing? How you doing? Good, thanks.
Kenny, my clicker that was working a few minutes ago is no longer working.
Well,
Is there something that,
we can go with a backup here.
is there something that we've done here? Thanks. So everybody, it's good to see you. It's really been great to get back out in public again. I'm a people person and I've missed all of you for the last couple of years. And so I really enjoy being out. And so today we're going to talk about flood insurance, flood mitigation, a lot of changes that have taken place over the last few months. And I'm going to integrate that with some sales stuff and some business stuff as well, hopefully helping. One of the things, I've been working with realtors now for 10 or 12 years. And one of the things that I know, but I've been drinking with realtors now for 10 or 12 years. But anyway, one of the things that I try to do is do as much as I can to reduce people leaving the business because they don't make it. And obviously, whether it's insurance or whether it's real estate, obviously the turnover rate is really high. And I feel like if we give people a lot of good information, like Kenny just did, it helps people stay in the business. And then that's all good for everybody. But anyway, bottom line is, what we want to talk about today that Kenny and I talked about the day before yesterday is protecting your clients, protecting your company, and protecting yourself. And in this area of Hampton Roads, flood insurance is a very, very prominent issue, and the lawyers are coming, okay? There are things that end up on my desk all the time that people are starting to look for litigation instead of other ways of resolution. One of the things that ends up on my desk a lot, and everybody chime in, okay? If you have case studies, if you have something interesting to say, I want to hear it. But one of the things that ends up on my desk all the time is there's a young realtor, doesn't have a lot of experience. They're working for a flipper and they find a house and they pay cash. There's no flood zone determination done by a mortgage banker or anybody along those lines. And they put another $50,000, $60,000 in it, make it nice and shiny. And then they go to sell it. And the buyer comes along and the mortgage banker tells the buyer that it's in a high risk flood zone. And the next thing you know, they find out they've got a $4,000 a year flood insurance policy on a $150,000 house. And not only do you have debt to income ratios with that, but most buyers at that level are going to say, why would I buy a big fat flood insurance policy when I could go buy more house? And so now the flipper is becoming a landlord instead of a flipper. And who are they mad at? They're mad at the agent. And so this kind of stuff happens all the time. And so what we want to do is talk about these case studies and allow yourself to protect yourself, like I said earlier, your client, your company, and yourself, so that we don't make those kinds of mistakes. So what I'm going to start off with is a little bit of an overview. Okay, we have changing weather patterns, bigger, stronger storms, rising sea levels, long-term erosion. Hampton Roads is sinking. Okay, and the scientists at Old Dominion are literally arguing over what is having a greater impact on our reoccurring flooding. Is it landmass sinking or sea level rising? But they're both happening. Okay, and the other thing that is happening that I don't have on the slide is the Gulf Stream is slowing down. And what the scientists tell me is that it slows down, it pushes water towards us. So we have more water coming at us because of that condition as well. And then what I have up here is poor building decisions. What used to be a good building decision isn't allowed to be built today. Okay, you're not allowed to build a basement in Norfolk anymore. Okay, it's against building code. So this house right here, my little joke is, this is maybe great on a day like that, but when the Cat 3 is coming in, it's not a very good building decision. So things that were fine, even 50 years ago, much less 100 years ago. I mean, one of the things that I deal with constantly is you have these older homes, turn of the century homes, and they have these little partial basements. Back in the day, those basements were used to store wood and coal and things of that nature. And what have we done since we don't need wood and coal anymore? We moved mechanical 5 feet below base flood. Okay, and so now you have all these houses with mechanical that if they get flooded, everything that they use to run their house is going to be gone. Okay, so New Bern, North Carolina was hit by Hurricane Florence, and somebody down there found me on the internet, and the next thing I know, I had like 50 clients down there in which I was working with those people, helping them put their house back together in a flood mitigated way, working with their builders. And so many people had mechanical in the basement that was totally lost and ruined, that it literally took some of those people up to 2 years because of the pandemic, because of the demand, because of all those other issues, 2 years to get their house back in running conditions.
Can I ask, like, why would we stop building basements? What would be like advantageous about that?
About stop building basements?
Yeah, why would they stop? Yeah, but I mean,
Because they flood.
yeah, but the alternative is build that prop, right?
Yeah,
but that's not.
build up. I mean, one of my sayings to realtors all the time is in Hampton Roads, don't build down, build up.
Right.
Okay, one of the biggest mistakes people make that cause them huge increases in flood insurance is they convert a garage into living space. And now we're measuring for flood insurance 3 feet lower than what we were measuring for flood insurance. I mean, a perfect example is we had a client that was a woman and her husband who wanted to buy a house because it was 3 doors down from her mother, and that's where they wanted to live. And the guy that was living there put the house on the market and was paying $400 a year for flood insurance. What he did is he converted his garage into a den without a permit. Okay, so nobody knew that he had done that from a flood insurance perspective. So she comes in, she wants to buy the house, and through all the, wherefores and how-tos, it was determined that we had to measure flood insurance from the slab of the garage floor, and the flood insurance premiums went from $450 to $3,500. Okay, so what we did is we helped that client work with a 203K. We converted the garage or the den back into a garage. We built an addition to replace the den on a crawl space, flood vented the house, and the house now had more square footage of living space. It had a 2-car garage, and the premiums went back to $450 a year. Okay, so those are the kind of things that people don't think about all the time. But in Hampton Roads, I mean, the second most common thing is somebody adding an addition on a slab when the rest of the house is on crawl space. And now we got to measure from the slab of the new addition, because they saved a few $100 or $1,000 because they built it on a slab instead of putting it on an enclosure. So these are some of the things that are happening to our region, and we are the second most flood-prone region in the United States behind New Orleans. Okay, so it's not working yet. It's working on the computer.
Anybody want a sandwich while they're fixing that? There's so many sandwiches, I'm gonna push them on y'all. If you did it, it's only a half, so don't feel.
Okay.
So anybody other half? Something? Okay.
So
Handing out sandwiches? Yeah, there's different.
I know, right? See, I knew somebody wanted one. Okay, sorry.
So there are over 80,000 structures in Hampton Roads that are required by law to have flood insurance. And I know that Kenny would want me to say this. The law states that if you have a federally backed mortgage and you're in a high-risk flood zone, you are required by federal law to have flood insurance. The mortgage companies are like the police officers of the flood insurance business. They're the ones that are responsible for pulling zone determinations and requiring that the insurance be in place at the time of closing. Now, anytime you buy flood insurance, other than a loan transaction, there's a 30-day wait. When Hurricane Florence was coming at us, I had someone call me and say, I'd like flood insurance from Wednesday to Wednesday. So the bottom line is, if it's in conjunction with a real estate transaction, there is no waiting period. It goes into effect the day of the closing. Okay, so there's 80,000 properties that are required by law. Now, once you get into Northeast North Carolina and you start getting up into Gloucester, those areas that are not considered Hampton roads, that number gets up to 200,000 really quick. So why is this important? Because if I was a real estate agent in Hampton Roads, I would not do any work on any structure without knowing if it was or wasn't in a high-risk flood zone. I can tell you right now, if Carrie is the one who tells you that it's in a high-risk flood zone, you've already made a mistake. Okay, you should know long before the mortgage banker does. But the mortgage banker is your safety. And they will tell you at that point in time. But a lot of times they tell you when you're working up on closing, and then you are going backwards in order to go back forwards. So make sure that you check that zone. Flood insurance is required by law. Currently, there's very little competition. The private sector, the regular insurance companies, they're coming back into the flood business, but it's like the Wild West. They're not exposing their financial strength. They're not exposing how they measure risk. I've been in the financial services business for over 40 years. I want to know what their capitalization rate is. I want to know what their rating with Moody's and Standard & Poor's is. Before I put my clients in a financial product, I want to know the stability of that financial product. And the private sector flood companies are growing very aggressively, but they're not exposing any of that. None of them are measured by Standard & Poor's and Moody's. None of them are exposing capitalization rates. None of them are doing any of those kinds of things. So I place people with the National Flood Insurance Program unless there's a really strong reason not to. And when I place them with the private sector, which I'm licensed with several companies, I ask my clients to sign a disclosure that I'm informing them they're accepting additional risk. Okay, and that additional risk is the private sector is not backed by the state or federal government. And if they go bankrupt, there's nobody there to pay the claim. Okay, so be real careful with private sector. I'm not an enemy of private sector. I think eventually it's going to be where the industry goes. But if you've got a premium that's $1,000 with FEMA and you got a premium that's $900 with private, I'm going to do everything I can to sell that client and go with FEMA. Okay, because they're backed by the federal government. So one of the things I want to talk about, when I got out of college, I went to work for a Fortune 100 company. I was with them for 12 years. And I was in production for sales for a large part of that. Then I got into management. And at one point in time, I had over 350 executive level salespeople under my supervision. And I put those people in 3 different categories. We had warriors, what I call them. And the warriors were the most aggressive of all salespeople. And they didn't care if they had a win-win outcome. They wanted a win outcome. Okay, so they would do what they needed to do, whether it was manipulation or whatever, to get the end result of the commission put in their checking account. Then you had people who I called wimps. They were always getting ready to get ready. They wouldn't ask the hard questions. They were afraid of rejection, and they fell out of the business. And then we had what I called warrior protectors. And warrior protectors were people who were going to protect their clients at all costs. They were the ones who did the most business. They were the ones who got the best results and the least complaints. And so as we go forward with flood insurance, we want to talk about being a warrior protector so that your clients will not only do business with you over and over again, they'll refer business to you. And so What you want to watch for is large premiums affect marketability and value. Okay, the National Association of Realtors says for every $10,000 you spend on flood insurance, I'm sorry, every $500 you spend on flood insurance, it devalues the marketability of the structure by $10,000. Okay, perfect example, we had a house in Largemont that was a $300,000 house. It had a $6,000 flood insurance policy because they converted the garage into living space. They put the house on the market in over 14 months. They dropped the price from 300 to 180 and still couldn't sell it. They heard about the work we do. I designed a $5,000 construction project that was done in one day that basically converted the den back into a garage. The premiums went to $750. They put it back on the market for $280 and sold it 2 weeks later. Okay, so when you have a big flood insurance policy, it creates all kinds of objections. Not only is the policy itself an objection, but it says, do you have crawl space damage? How many floods have you had? You know, all these different things, which kinds of leads to what one of the things we're going to talk about today, which is the new legislation in the state of Virginia through DPOR that severe or repetitive loss properties have to be exposed or talked about. And we'll get to that in a minute. But the bottom line is, in the flood business, you want to be a warrior protector for your clients, whether you're on the selling side or the buying side, because it has a legitimate impact on the value of the transaction. Big flood policies counting as debt to income. Foreclosures are occurring because of flood insurance. You have a house on a slab, which is very difficult to mitigate. Okay, the only way to mitigate a house on a slab is you can lift the house, which is a 6-figure project. You can, if the structure will support it, you can build a second floor and turn the first floor into non-living space, or you can tear it down and start all over. Okay, so one of the saddest stories that comes across my desk on occasion is you have the older couple. They have a $200,000 house, let's say. When they retired, they paid off their mortgage and they dropped their flood insurance, because if you don't have a mortgage, you're not required to carry flood. 20 years later, they need to move in with family or assisted living, whatever. They go put the house on the market, and when they drop their flood insurance, it might have been $400 a year. Now they go to put it on the market, and the flood insurance is making up a number, $4,000. So they got $200,000 of equity. They can't sell the house because of the flood insurance policy, and they can't do a reverse mortgage because the cost of the policy kills the deal because of debt to income ratios. And now they're sitting on $200,000 of equity they can't get to. No way to get to it. And so those kinds of things are why you want to be a warrior protector when it comes to flood.
Quick question for you.
Yeah.
Had they retained that policy, had been,
I'm sorry, I can't hear you.
sorry, had they retained, and just for that, had they retained their policy, would they been able to grandfather that in?
Well, they did. They dropped it when
Had they retained it, I guess.
If they had retained it, it would have gone up in cost over a period of time. Flood insurance for a long time, a lot of people consider the National Flood Insurance Program as one of the best residential real estate development programs in the history of the country. And the reason why is when they created the program, they purposely deflated premiums in order to encourage people to build in high-risk areas. Okay, and so by building on those high-risk areas and being insured, it reduced the risk, but the cost of the risk was falsely deflated. So the National Flood Insurance Program is $25 billion in debt, and they're trying to make adjustments to fix it, and it's a hot mess. Okay, it's just, I could spend all day talking about that. But anyway, what happened, there was an act in 2012 that was supposed to rectify the situation, but the legislation overreacted. And one day you woke up and your policy was $350, and then the next day it was $7,000. So the real estate industry and the mortgage banking industry reacted. People who were wealthy, who had access to politicians, reacted, and the Bigger Waters Act of 2012 was rescinded. In 2014, they put in what's called the Flood Insurance Homeowners Affordability Act, which is supposed to recreate bigger waters on a more gradual basis. That was recently retracted, and now we're gonna go into what's called risk rating 2.0, which I'll talk about in a minute. And so it's this it's just people in Congress who don't know what they're doing, making bad decisions. So,
That never happens. Never happens.
so real quick, little fundamentals. There's everything's being redone now, so we're not gonna spend a lot of time on this. The main thing that I want y'all to know is there's two kinds of flood zones in Hampton Roads that are considered high-risk flood zones. One's that start with A and one's that start with B. So when you look at a flood map, if you see a V or an E, flood insurance is gonna be required if there's a mortgage. If you see an X, flood insurance is not required. Okay, now one of the things I tell people moving to the area, I mean, 80% of my business is referred to me by real estate agents. So it's my job to help that house get bought and sold, or I'm not gonna get any more referrals. Okay, so when I look at these things and I'm talking to people, especially people moving into the area, and they start reading about the flood prone issues that we have, the first thing I tell them is I said, stop paying attention to the flood zone. Okay, if you live in Hampton Roads, you should have a flood insurance policy. It's not about the flood zone as much as it is about the structure. Okay, I would rather live in a high structure in a high risk flood zone than live in a low structure in a low risk zone, because these storms don't know where these lines start and stop. 80% of the houses that were destroyed in Hurricane Harvey in Houston were not in a high risk flood zone. Okay, now there are people out there that are being recruited to this area, like by Centera. And Centera, when they recruit a doctor, the doctor has to sign a contract that he's not going to live in a high risk, or she's not going to live in a high risk flood zone. Okay, because they want that doctor to be able to get to and from the hospital in emergency situations. So it has impacts in various parts of the scenario. But anyway, B sector and A sector. Okay, elevation certificates are a legal document created by FEMA, completed by survey firms, used by mortgage bankers and insurance agents, real estate agents, in order to determine various aspects about the house. Well, as of October 1st of last year, they have lost a great deal of their relevancy. They're no longer required to quote flood insurance accurately. Okay, and again, we'll talk about that more. So elevation certificates are going to be critical in some areas. They're going to be critical for new construction. They're going to be critical for major remodels, and they're going to be critical for contesting premiums with FEMA if people feel like they're being priced unfairly. So one of the things I want to make sure I tell you, who's familiar with the 50% rule in high-risk flood zones? Anybody? If you are remodeling existing structures in a high-risk flood zone, and your remodel costs more than 50% of the value of the structure, then you are required by law to make that entire structure completely FEMA compliant. Okay, so backing up a little bit, every city in Hampton Roads belongs to what's called the community rating system. We call it the CRS. The CRS is a program administered by FEMA that is meant to mitigate entire communities. The better the cities perform within the CRS program, everybody in that community gets discounts on flood insurance in 5% increments up to 45%. What's critical that y'all know is that part of the CRS program is FEMA building codes. And the way FEMA manages those building codes from afar is through the permitting and inspection office of every city. So if you, this is one of the things that pops up on my desk, somebody gets in the middle of a major remodel, they're getting permits from the city, they're already $50,000, $100,000 into it, and the city goes, whoa, you got living space 2 feet below base flood, you're gonna have to lift the house. And that's gonna cost $250,000. Okay, so any clients, did you have a question?
I do, and maybe the Virginia Beach has this whole new flood mitigation program they're doing for the whole city.
CRS.
Are you gonna talk about that later?
We can, yeah. I
Okay.
mean, I'm talking about it now.
Well, I mean, the proposed projects that they're gonna do for, the dikes and the levees and.
Yeah, I'm not gonna get that much into that because that doesn't, the thing about it is they can build all these dikes and levees. It has no impact on the cost of flood insurance.
Got
Okay, so,
And
it's
lots
good
of
for the
people-
city.
And that's where I was going with it.
Yeah, it seems
And
like
I-
it would,
For
doesn't it?
personal reasons.
Yeah.
And I was gonna say though, there's a lot of contingency fighting that still,
Yeah.
because they don't want to see the taxes go up.
Well, it's already been voted into place.
So has it?
Yeah.
Okay.
It's already been voted in. So the bottom line is, any new construction, any major remodels is gonna need an elevation certificate because that's how the city can issue permits and inspections by making sure that house is compliant. One of the ironies that I think everybody should be mad about is when we went to the new risk rating 2.0, which we'll talk about more, on October 1st, there is no more financial incentive for mitigation. Okay, so if you get a big fat flood insurance premium, it is what it is. Mitigation's out the window, it's done. It's gone until somebody finally makes some changes about it. The thing you should be mad about, other than the fact that we can no longer mitigate and receive financial benefit for it, is that you're still required on new construction and major remodels to spend the money mitigating. Okay, so if you're building a new house and it's on a crawl space in a high-risk flood zone, that first enclosed floor still has to be 3 feet above base flood, which costs money. You're still required to put in flood vents, which costs money, but there is no financial relief on premiums for doing it. So, and I got a whole slide up here on 2.0 we'll talk about in a minute. So we're raising premiums and we want to lower exposure. And one of the things that we're going to talk about in a second, when you see high premiums on houses, that should set off alarms. Okay. And one of those alarms may be that the houses are what's called a repetitive loss or a severe repetitive loss. And what Kenny was talking about earlier is DPOR has now got a one-page form that if the homeowner has actual knowledge of a flood claim history of $1,000 or more, then they have to report that to the buyer. Okay, that's huge. And here's where the argument is. FEMA will only release flood history on a structure to the owner of the structure. We're a buyer beware state. So how is a buyer going to beware if they can't get the information from the entity that's paid the claims? Now you got to remember, we're dealing with the National Flood Insurance Program, a federal product, not an insurance product. So unlike insurance companies who have to report claims, the federal government doesn't. And it's not part of the Freedom of Information Act, so you can't get it. So the state of Virginia has pushed through, with the help of several realtors, a document that says if you've had a flood claim of more than $1,000, at least twice over a 10-year rolling time frame, you have to tell the seller. Now, there's all kinds of issues in this that can cause problems. And one of the issues is the owner doesn't have actual knowledge. Take, for example, Windsor Oaks and Windsor Woods. When that flooded because of Hurricane Matthew, a lot of people there did not have flood insurance. So if they didn't have flood insurance, they didn't have a flood claim.
Oh, that's such a good point. Yeah.
Okay,
Not only
Yeah.
that, but I saw there were a lot of houses where people literally just, especially those townhouses in the back where they walked out.
well, there are a lot of real estate agents, as y'all all know, that don't have, I mean, they're the warrior sellers, okay? And what they did is they put those houses back on the market and sold them like a car payment. Okay, your payment to live here will be $1,800 a month. They didn't tell them $500 a month of it was flood insurance.
So this was a great conversation that me and Mike, we probably had an hour-long conversation the other day talking about this. So what I'm getting ready to say is coming from a broker standpoint. And when it comes to protecting your client, this is, and Mike pointed out, this is not coming from a marketability standpoint or negotiation standpoint, because we all know, depending on what's happening in the market, you may waive a home inspection, you may not ask, you're trying to make the contract as easy as possible. So what I'm getting ready to say is coming from a broker standpoint. And here's what I would say. If you have a house that is in a high-risk flood zone, then you might really consider putting a contingency in the contract that seller must provide the FEMA flood history of the home. And I think that solves the problem, except for some other issues that Mike brought up that we'll talk about. But from a standpoint of if you want to make sure that you have that history and you know that it doesn't have repetitive loss, then you put the owner on notice and have that required. So then Mike brings up, because I asked him, I said, well, look, what website do we go to request this as an owner, and who do we call to request that? Mike's like, well, if you call this person, they'll tell you no. And if you call this person, they'll look it up for you. And then, so there's a problem within the system itself of an owner even able to find out where to get that information. But as the buyer, representing the buyer, that would not be your concern, right? Your concern would be, I want to make sure I have this. So you put a contingency in there that says, we all know a contingency has to have what it is in an end time frame before it gets released and what releases it. So you just put a proper contingency in there that says seller to provide FEMA flood history of this home for the past 10 years, and that would solve that problem. But there's other issues. Again, that's a broker standpoint, not a marketing standpoint, because in this market, if you're making a seller do that, he's gonna be like, I'll take the other 30 contracts I've got. So just a thought.
Yeah.
Well, and then you could have repetitive loss on an X too. Like,
Yeah,
Sure.
I mean,
Like, there's a lady that was in that meeting that we went to, and she said she had repetitive loss on an X zone, so it's never even gonna come up because she's not in a, it's not.
Yeah.
Not in a flood
Well, let's be honest. If you live in Hampton Roads, I think you brought this up to me, you're in a flood zone, period.
well, every house is in a flood zone, or just are you in a high risk flood zone?
I got a question here from chat. Amber's asking, where do the sellers get the flood history of their home?
You get the only way to get to flood history is to go through FEMA. And what I was telling him, there's sometimes you call, almost everybody that works for FEMA in the service part of the flood insurance program is a subcontractor working from their home. And you talk to some that are really knowledgeable, and you talk to some who aren't. You talk to some who are going to be very stringent on how to do it. There's going to be some people who go, I'll send it to you tomorrow. That's the problem that I was talking about with Kenny. So the most stringent aspect of it is writing a letter and having it notarized and sending it to FEMA with a formal request, which is going to take 2 weeks.
Yeah, so this couldn't be a short contingency period. Like, that's a solution, but we're
Yeah.
talking.
Yeah, that's what I'm saying. So
Yeah, it's not a marketing thing.
Yeah, no,
It's
no,
a
yeah.
strictly what a lawyer would do
Right.
to protect their
Yeah.
client.
Is, if they go to the FEMA website, can they
just
look
go,
it up?
just type in National Flood Insurance Program and a phone, a 1-800, I think it's an 866 number comes up, and you can just call that.
So, but when you quote a FEMA policy, you can't tell if it's a repetitive. I thought you guys, when you quote them, you can tell it's a.
What
repetitive.
happens when we put in the quote is if it is a severe, there's 2 categories now, risk, repetitive loss, severe repetitive loss, and I'll talk about the difference. But when I quote a structure that is formally in one of those 2 categories, the quote will stop me from pricing it and say, this may be a repetitive loss property. And that's all it says. Okay, and that's all I know. So obviously that's a pretty strong indicator.
Yeah.
But let me give you a perfect example of a horror story. Okay.
Postcard couple.
So 2 young kids, I'm 63, anybody under 30 is a kid. So 2 young people that were, they were literally in their young 20s. Both of them were in the Coast Guard. They were married. They bought a duplex, one side of a duplex on Dinwiddie Street in Portsmouth. They're,
Stephanie's client?
yes.
Yeah.
$1,800 a year in premiums, and they accepted it. Okay, and it was about, I think it was $180,000 purchase. Somewhere in that
Should have
kind
been
of-
red flag or thing. There's a lot
Yeah.
for, yeah.
Yeah. So anyway, it didn't, when it was quoted by whoever their agent was, I think it was USAA, it did not flag repetitive loss or severe repetitive loss. They were there for a couple of years. They were getting ready to get transferred. They wanted to put the house on the market. And they got a letter from USAA. And the letter said, you have been moved to the severe repetitive loss category. We can no longer manage your policy for you. Whenever you're in one of those two categories, FEMA is, I have to deal directly with FEMA. I can't deal with a third party. So they get a letter 2 weeks later from FEMA. You're now part of the severe repetitive loss property and your premiums are $12,000 a year. Okay.
So, quick question for you. What's in there? That policy, now, that was a flood policy that USA was
Yes.
quoted at 1,800.
Yes, and then when it got
That's in
moved to
addition to the regular
SRL,
homeowner policy, 1,800, just flood.
just for flood.
And then once it fell into one of those two categories, it's kicked out of the commercial.
It's
Flood insurance
moved,
policy.
it's moved from being managed by USAA to being managed by FEMA.
Automatic. So
Automatic.
if you're in one of those two categories, you cannot do private flood insurance.
No, and you can't even do it through Allstate or USAA. You can only deal with FEMA Direct. And it's called FEMA Direct. And I'm licensed with FEMA Direct and do a lot of business with them. So anyway, the premiums went from $1,800 to $12,000 a year. And when they were getting ready to try to sell a $180,000 duplex. The floods occurred when they were in diapers. Okay, so they had no knowledge that their unit had ever flooded before. And if you want and use this form, it would have absolutely no impact. Okay, so if they went to sell the house, they had no actual knowledge of the house ever flooding. Okay, so anyway, I was able to, a lot of times when I look at flood insurance policies, that's a problematic policy. The first thing I do is start with the white collar stuff. Okay, is it written right? Are all the rules followed? Is everything done? Well, there were mistakes written on the policy that I fixed, and we got the flood insurance from 12,000 to 4,000. And then we mitigated and got the premiums back down to less than 2. And we're able to fix a lot of it. But the bottom line is, this form is a good start, but it's not the solution. So when you use it, be careful. I mean, for example, one of the things I tell real estate agents all the time, don't ask, do you have flood insurance? If they paid off the mortgage, they may not have flood insurance. Ask what flood zone they're in, and ask, most people are going to tell you the truth about flood history. I mean, there are going to be people out there that are in dire straits that are going to lie, but there's ways to find out the truth. And what you want to do in these situations, there's 2 issues with selling a house that has a flood history. There's the premiums, and then there's why is it flooding? Okay, because if you can't prove to a buyer that you've solved the reason for it flooding, you're going to have a bigger problem than just the premiums. So 1 second, Bobby Wilder, the coach of Old Dominion, had a $700,000 house in Larchmont, and he's given me permission to tell the story. Had a $700,000 house in Larchmont. He had a huge, like a $7,000 flood insurance premium, and he had $200,000 in flood insurance claims over about a 5-year time frame. Okay, so there was a creek behind his house. It was over towards Surrey Crescent and Richmond Crescent, which is extremely flood prone. And when the water came, it came from the back of his house and into his back door. And that's what was going on. So we mitigated the house as far as flood compliance was concerned, got the premiums way down, but then we built retaining walls and French drains and did all these other kind of things and proved that we stopped the reason for the flooding. And because the premium went way down and because we could prove the flooding went away, we were able to sell this house at full market value. Okay, so you have to look at it when you do have a flood claims history, you have to look at how to fix the flooding. So we have a house in Lynn Haven Colony right now. We lift houses, move houses, fill basements, move mechanical. I'm not a construction company, but I design the plans and the construction companies do the work. So we're getting ready to lift a house in Lynn Haven Colony. And we got $286,000 in grant money from FEMA. and they borrowed $300,000 from Bill West at Town Bank, and they're going to completely, so we're gonna lift it, which gets rid of the reason for flooding, and then justifies them putting 300 grand in to remodel the interior and exterior of the house. Okay, so it's gonna be a complete, it's gonna, I mean, this is one of the things the banks have a hard time getting their head around. The banks don't know how to handle, if a house has a $5,000 flood policy and they got $200,000 in flood claims, what's it worth? Okay, and then if you lift it and you don't, and it doesn't, the flood issue goes away and the premiums go to 450 and it's on deep water, what's it worth now?
Right.
Okay, so dealing with Bill over at Town Bank, he had to configure, okay, we gotta lift it first, because that's gonna change the value. And then go from there. And so anyway,
But did many people, that was because they had that, wasn't it, they had a basement?
no, the one about that we're lifting,
No, I'm talking about the Coast Guard couple, didn't they have a basement?
they had a basement, we had to fill the basement and get, they had a hot water heater down there. And
Cause I
all of that.
talked to them at one point because they were looking at like a refi.
Yeah,
They were on the verge of foreclosure.
yeah, they were. I mean, the $1,000 a month to them was a
It's
lot
so
of
much
money.
money. Yeah, it's crazy.
Yeah, so
That's after tax.
comment in here, which is probably a comment and a question. Do you think this is gonna start leading to people not making claims in order to get the
Well-
rates down?
Yeah, I mean, that's, too many people make stupid claims. Okay, I've got a guy, I've got a person who owns a house that is paying $12,000 a year in flood insurance. There's severe repetitive loss. Okay, let's go back 1 second. You have repetitive loss, which is 2 claims of any amount over a 10-year rolling time frame. Yeah, over a 10-year rolling time frame. Any claims. Okay, then you have severe repetitive loss, which is 4 claims of any amount or 2 claims that are more than 50% of the value of the structure. Okay, so I've got a person that's a client of mine, and he's paying over $12,000 a year for flood insurance. The previous owner filed 4 claims. All 4 combined were $28,000. All 4 were for ductwork. Okay, so if that previous owner had put in a splitter system or some other system and got rid of the ductwork, there wouldn't have been any claims. But I mean, one claim was for $1,800. Okay, but that 4th claim took them from repetitive to severe repetitive, and the premium difference is huge.
I have a question. I'm over in Cape Story, which is right off Story Drive. Are a lot of the folks in there grandfathered in?
Grandfather's going away.
I suppose, yeah, okay.
Yeah, grandfather's going, grandfather, what that actually means is that if the house was built before the flood maps were drawn, then the people didn't know any better. Okay, so the government gave them a break. But with 2.0 that went into effect October 1st, grandfathering will be phased out. So 2.0, any new policy right now that's purchased as of October 1st is 2.0. And we're going to talk about 2.0. Anybody who has an existing policy will go on 2.0 when they renew after April 1st. Okay.
100%? I mean, it won't be gradual.
No, it'll be
Here it is.
Yeah. And so grandfathering will go away when they renew after April 1st.
What's that gonna be, Mr. Broker? What are we looking as far as how that impacts our market?
Well, it depends on how much the premium goes up.
So it sounds like it could
For
go
one
up
thing, to go back to you, your premium can only go up. Let's say hypothetically, you're paying $1,000. And FEMA says that under 2.0, you should be paying $5,000. Your premium would go up 18% per year until you get to that point.
So it is gradual. Like,
Yeah.
But if you sell that house, it's full force when that you buy.
It goes, yeah, and it goes to the full price.
yeah.
Just like anything else, you asked what effects that gonna have on the individual house or market as a whole. Just like anything else that affects your buying power, right? That affects your buying power. Interest rates affect your buying power. Everything affects that whole thing about that house. So if obviously that's going up, then it's gonna affect people's buying power. And when you affect their buying power, you affect the market as a whole, because people will start paying less overall for properties in general. Because they can't afford
But
it.
for what you said about
Does that make
not
sense?
saying what somebody pays and what they're paying, I've had agents ask me, well, what are they paying currently for flood insurance? That may be totally.
Well, and there are people that are going down. I mean, one of the things that 2.0 is a hot mess. I mean, I cannot tell you how I wish I could use the 4-letter bomb. I mean, it is messed up. Let me give you an example. I've got a client in Larchmont who's currently paying about $5,000 a year in flood insurance because they have a basement loaded full of mechanical. And under the old system for pricing flood insurance, I have to measure flood insurance from the slab of the basement floor. Okay, well, now with 2.0, we're measuring flood insurance from the height of the first enclosed living floor, which if you go back to those houses in Larchmont, you go up 10 steps. Okay, their premiums are going to go from $5,000 to $450.
But then they don't have the coverage they need, right? Like then they're gonna end up repetitive. severe
Well, but
repetitive.
the thing is, they've done nothing to mitigate the risk, and us taxpayers are going to pay for the loss.
Because they're gonna have to make 4 to
Yeah,
5
I mean, it's great for that owner.
Sure, short term,
But it
Yeah.
makes no sense.
that's wild.
So question in regards to old homes being torn down and new ones being put up. If the old home had repetitive loss, does it count against the new home since it would have the same 9/11 address?
No, what happens is, when you tear that house down, okay, flood insurance is all about the structure. Homeowners insurance has become almost as much about the people in the structure as the structure. Okay, so homeowners insurance, if you've got a bad driving record, you own 2 Rottweilers, your credit score sucks, your homeowners insurance is going to be a lot more expensive than everything else, because they're looking at your character and your decision making, and they're like, if you can't manage your life, you can't manage your house.
Usually people call me and say, oh, Carrie, I need to make an insurance claim, and it's like, their window is left open,
Yeah.
and their floors are wet. I mean, I'm serious.
Yeah.
It's insane.
Yeah. And so with flood insurance, it's about the structure only. And so if the structure goes away, the flood insurance is going to be based on the elevation certificate that's created by the new structure. Okay, so anyway, with elevation certificates, if there is new construction or a major remodel, you get an elevation certificate based on the drawings. The architect can provide the EC, or they can provide the drawings to a survey firm. And you have your elevation certificate done, and your flood insurance during the building process is based on the elevation certificate with drawings. Once the project is complete and an occupancy permit is obtained, then you need to update the elevation certificate, and then the flood insurance is repriced at that point.
So I do agree. This is always my kind of point of progress. Always my issue with flood insurance is, it seems like they're in a contract lease as written, there's no out, right? So right now, they're paying $400 a year, and that's the only thing we know.
Yeah.
Now we're past our 10-day home inspection contingency, that's lifted, we're moving on, and then we find out.
Well, that's why it's important for you to check flood zone, so you do all this in advance.
Well, yeah, but I mean, I guess the question comes is, now I know it's in an AE, right?
So here's the thing. How many of us wait until a week prior to closing to tell our clients, hey, go get your insurance quote, make sure you get that insurance. We're all guilty of that. Every single person in here is guilty of that, right? Because it's the last thing we think to tell them. Well, what we should be doing is the day they go under contract, get your insurance quotes. And that would include getting your flood stuff.
And then how long is that through FEMA though to get
I can give you a quote in 15 minutes.
Yeah, I just.
from
texted
FEMA
her.
without a elevation certificate?
Well, like I said earlier, with risk rating 2.0, elevation certificates are, now, let's go back again. Under the old system, elevation certificates were critical, okay, because 99% of the time it lowered the cost of flood insurance. I mean, I had a young lady in Hampton who had bought a house 3 years before I ever heard about her, and she was paying $3,600 a year in flood insurance. We got her an elevation certificate, the premiums went to $600. Okay, and that's not uncommon. So now with 2.0, it used to be when I went to quote a flood insurance policy, I could look at the back end and tell people why the policy cost what it did. With 2.0, they've created an algorithm, and I know what's in the algorithm but they won't release how the algorithm is weighted. Okay, so it's in a black box, and when the premium pops up, I can't tell you why it is what it is.
Okay,
And
so, I
and
guess
so-
my question is, so now with 2.0, April 1st, okay?
Well, it's now 2.0 is
Okay,
now.
okay, so the 2.0, but the new number is coming up in April 1st. It
Well,
doesn't-
anybody who
that means it's-
renews, anybody who has a current policy
Okay,
that
but if it's
renews after
still-
April
it's still
1st,
2.0.
it goes to 2.0. The
So we can
1.0
call
goes away.
you and get a,
I can get a 2.0 quote anytime. And it's sometimes they're much better. Sometimes it's a lot worse. I've got somebody, and this is where it's not making any sense to us. And I have contacts all over the country. I have built relationships with people that are really high up in FEMA, and nobody can give me a straight answer. So I have a guy on Sandbridge right now that owns an investment property on the ocean, 100 yards from breaking waves. He's on a slab with a house that was built before the flood maps were drawn. And did I tell you he's paying almost 10 grand a year in flood insurance? On 2.0, he's gonna go to 1,000. Yet I got a house in Kempsville, nowhere near water, that's on a crawl space, and the premiums are 2 grand a year. I mean, none of it makes sense. So when people call me now and ask me what I think, I'm like,
2020 rules still, we don't know. What's up? Okay, and this is a very general question, but I've just always wondered this. What the F is going on with like Princess Anne Plaza and like Windsor Woods and that whole area? It's like.
well, they got moved after
Matthew.
Matthew. After Matthew, most of that area was not in a high-risk flood zone.
Right,
After Matthew, they got moved into a high-risk flood zone.
but not.
And a lot of them are on slabs below base flood.
Okay.
Slabs are rated very poorly, okay? One of the things I tell people, without trying to upset people in the real estate business, newer houses are built on raised slabs.
Right.
A lot of older houses are built without flood maps, before flood maps and things. See, the flood maps in this area were drawn in the mid-70s. So when you go into Windsor Oaks and Windsor Woods, a lot of those houses were built in the 50s and 60s. And so they were built before the flood maps were drawn, just like Glen Haven Colony.
Right.
And they're all below base flood. And base flood is that magic number that FEMA uses to compute the risk of flood insurance.
It's also the crappy drainage throughout the city as well.
Yeah, and that's what was the big thing in Matthew, and it's gotten a lot better because what happened is a number of those communities who felt like neglected from the ocean front and all that other stuff, they got together, they formed various organizations, and they politicized flood. And all of a sudden, politicians had to respond to it, put it on their platform and make promises. And so it's a lot better now. But when Matthew was coming, the city of Virginia Beach had not managed its drainage systems, its ditches, or anything for years and years and years. Not only that, 3 weeks before Matthew, we had what was called a 100-year storm, which was a lot of water. Then right up before Matthew, we had a 500-year storm, which is a lot more water.
Right.
Windsor Lake, which is the lake next to Mount Trashmore, was full. Everything was full. And then Matthew comes in and it was a 1,000-year storm. And when you measure storms by years, it's how much water drops at a certain time frame at a certain geographic area. And everything was full, and we get a 1,000-year storm, 13 inches in 2 hours. And what happened is Windsor Lake runs on to Old Forge, across South Plaza, down the road, all downhill until it hits Rosemont and Bow Creek. So when the water hit down, you overflowed and ran down, when it hit Bow Creek, it started backing up because it had nowhere to go.
Makes sense.
Okay, and then all those houses on slabs started flooding, and none of them had flood insurance.
That makes so much sense though, because I never put it together, because I'm like, with me, if someone wants to see one, I'm like 50-50 shot, if it's gonna be a flood zone or not, and I never thought about crawl versus slab.
Yeah.
That helps.
So anyway, 2.0, is everybody okay on time? Should I keep going?
Okay.
Oh,
Okay, 2.0, like I said, it went into effect October 1st. It'll be totally in effect after April 1st. Elevation certificates to price flood insurance is no longer good. Now, one of the things I'm studying, and I don't know the answer to yet, will elevation certificates actually help with this hidden algorithm? Okay, so I'm starting to do case studies and do quotes with elevation certificates on my old clients that I have. I mean, I've got thousands of elevation certificates on file, and I'm starting to run quotes in 2.0 without elevation certificates and then with them to see what's gonna happen. Mitigation is no longer financially incentivized. I just ran a quote on a house and proposed and the premiums came in at $5,000. I ran it with putting in flood vents. The premium came in at $4,900. So it is what it is. I mean, I can't tell you, I mean, if you want me, I'll cry you a river because this shit is rough to my business. Okay. That's why we're moving into doing some other things. I'm going to be doing a lot more consulting. Like, for example, I met with a homeowner who's buying a house in Chesapeake and he was concerned about flood related issues. And I went out there and said, do rain barrels, do gutters, do this, do that, and charged him a fee. And he felt good about it.
Can I ask you, the mitigation, by the point where you're getting to mitigation, are you mostly dealing with like the insurance company at that point? I mean, it's not a typical homeowner repair unless they're trying to.
That's restoration.
Oh,
Yeah,
restoration.
In
Okay.
which we do restoration as
Okay.
well. I mean, we're all things flood, okay? One of the things I do is I call on other insurance agents to get them to send me their flood
Yeah,
or water related issues, even if it's a pipe.
yeah.
Because I have relationships with construction companies that will respond because I have contracts with them.
Right.
I get a commission from the construction company.
Cool.
But I manage that and make sure that they get local service, get firsthand. I mean, the restoration companies I work with, if they had homeowner Y call them, or they had me call them, they're coming to me first because I send them a lot of business.
It's a lot to it. Yeah.
Premiums will go up 18% per year max. Now, there's one caveat to this. If it is a commercial property, if it's a rental property, if it is a vacation home, anything other than a primary residence, the premiums can go up 25% per year.
Wow.
So when you're working with an investor who wants to buy rental property, you got to work the cost of flood insurance and those increases into the rate of return on the investment.
If he's buying it now, it's gonna go to that higher premium anyway.
Yeah, but this is where I really want you to take this seriously. Be a warrior protector. Be a warrior, fight the battle and protect. There's a difference between going out and being a warrior and wanting to share in the loot. There's a difference between being a warrior protector. And you got to be a warrior protector with flood insurance and flood related issues.
That's gonna be huge in Sandbridge and the Outer Banks.
No, it's huge. I mean, I do business from Baltimore to Key West. I mean, there are areas, Charleston has 200,000 required flood insurance policies within 100 miles of downtown Charleston.
I think most real estate agents are warrior protectors anyways.
Yeah, they do.
We're a very unique industry in that we are buying something for somebody. We're not selling something to somebody. And there is a huge difference in that statement. And most people say, oh, I sell real estate. No, you buy real estate, you help somebody buy a piece of real estate. You help somebody sell as a listing agent, but honestly, we're all protecting that third party because we're not the main person. I'm not selling you a car that I own and negotiating against you, no matter who I represent, buyer or seller, I'm actually got their business. So we're already set up to be warrior protectors.
And I just want
As
to
real estate
reemphasize it and
Yeah,
bring.
absolutely.
And the other thing too, the most important part of being a warrior protector is the fact finder. Finding out what makes that person float on hard facts, which is their name, their income, all those kinds of things, and the soft facts, which is what are your goals and dreams. And you can't be a consultative salesperson. You can't be a warrior protector if you don't have all the facts. So the fact finder is the crucial part. Proximity to water is an important part, but again, I don't know how much that weighs into the algorithm, but it's new. Proximity to water, and if you think South Side Hampton Roads, unless you're in certain parts of Kempsville or Suffolk, almost everybody has to deal with proximity to water. One of the things about the private sector, there are a lot of private sector companies will not sell flood insurance within a mile of water. You know, why are you going to be a flood insurance company if you're not going to sell flood insurance to those that need it? The emphasis on the CRS program, the community rating system that I talked about earlier, there's going to be a lot more emphasis on mitigating entire communities And it's gonna be a big part of building code, and getting that done. One of the things that they're telling us that I have not seen yet is they are telling us that we should be able to ultimately know what the highest cost of flood insurance is gonna be on a particular structure. I would trust that no farther than I can throw the structure. Okay, so.
Yeah.
So anyway, best practices, be proactive, start with zone determinations. If you use Carrie consistently, she knows this stuff really well.
Pretty much every property, unless I know the area, I'm looking up, and I don't use your system. I literally go to the FEMA map and look,
Yep.
just plain sight, is it in the flood zone?
Exactly.
I don't trust all the data that's entered in to the rating
Right.
system. I just go straight to FEMA.
Always
I've
zoom in all the way.
Well, let me tell you something that hold on one second, I'll get you next. One thing that hardly anybody knows that is really important. They changed the code on October 1st of 2019. The rule used to be that if the structure or anything permanently attached to the structure was in a high-risk flood zone, then the whole house is in a high-risk flood zone. So if the deck was running through the high-risk flood zone line, then the entire house. But on October 19th, and I can tell you right now, the vast majority of insurance agents don't know this. It has to be the foundation of the house. The permanent attachments no longer count.
That's why that map is so important, because I can zoom in and I can see, because you'll get flagged that a property's in a flood zone, but really it's just the back corner of the lot.
Yeah,
Or like you said, it'll be the deck.
yep, it has to be the foundation of the house. You'll see a lot of newer communities where the streets are blue, which is the flood zone, because they purposely build them lower. So the water runs into the street, the drainage systems. You'll see drainage areas behind houses that are purposely developed by the city. And those areas being in the high risk flood zone, but the rest of the property isn't.
But the other part of that too is when you look at the FEMA map, you can easily tell too, because half these houses are not in the flood zone, but the street is surrounding them. So you need to let your people know, hey, if you buy this house, that's cool. But when you think there might be an issue with flooding, get your house out of the street. Because that's what's happened in Norfolk a lot, is these people, their home was fine, but their cars were destroyed because they left them on the street. And, or no, hey, you may not be able to get out of your neighborhood for a day because you have to wait for the flooding to go down. Because it's literally like the house was built up.
Well,
then
and
all the
a lot of
streets
these
were destroyed.
neighborhoods like Largemont, Pocosin, they know to watch the weather. And they literally every day get up and check. There's a real estate agent, Randy Mason. There's a real estate agent, Randy Mason, and I've told this story before. 6 or 7 years ago, my wife and I were in the housing market, and we saw a house in Haygood that we liked. And the agent, the sign in the front yard was Randy. I called Randy, scheduled an appointment for Monday after work. She calls me later Sunday and says, I got to reschedule. It might rain tomorrow. And I'm like, what? And she goes, well, I live in Colonial Place and I can't get in and out of my neighborhood if it rains as much as they say it's going to rain. So, perfect example. Yeah.
I will say, I mean, Carrie said this about rain, but I've actually seen where the information in rain is completely wrong about a flood zone. So I always.
If you look at Pungo, right?
Yeah.
A good example of being to zoom in all the way. Anybody know what Pungo Ridge is?
Yeah.
I live on the Pungo Ridge, right? So if you're on the Pungo Ridge, you're not gonna flood. If you live right next to the Pungo Ridge, you're gonna be underwater.
Yeah, well,
It's
you
a
take
big thing.
Pungo, you take Pocosin, there's certain areas now, if the wind's blowing in the wrong direction, it's high tide and a full moon, you're gonna flood, and there's not a drop of rain.
He gets flooded.
Wind matters
opposite.
more. I live one lot off Back Bay. Wind matters infinitely more to me than
Yeah.
any.
Wind's coming from Texas, you guys are in trouble.
If the rest of y'all get 13 inches of rain and you're all flooded out, but the wind's coming from the north, I'm high and dry.
Hey, high tide and full moon would be a good book if you're right.
1 inch of rain.
Yeah.
I would buy that.
Well, I mean, it's funny though, but if you are in Largemont or Ghent and you've got northeast winds, full moon, high tide, and a little bit of rain, you're gonna be knee deep in water. So anyway, work with your insurance and banking providers. They are great resources. They deal with this. I mean, some agents deal with flood related properties all the time because they're selling in these areas. I tell them it's like using a software every 6 months. You got to relearn it every time it happens to you. So you have people like Carrie that can answer your questions. I can answer your questions. I mean, part of my marketing is call me and ask. Okay, that way I know you got my phone number in your phone. So the construction we've already talked about that. Any questions, consult your friendly neighborhood mitigator, and I'm the only one in town. So, and know how to represent your buyer. Okay, one of the things I tell people quite a bit is real estate agents is if you're brushing up against debt to income on somebody that, it's usually the lower income houses, there's a chance that flood insurance is going to go up in price faster than their income. And when they get to having cash flow problems because of flood insurance, they're going to blame you. And that's not right. It's not fair. I do everything I can to protect y'all when those things happen. But if you're brushing up against somebody on the debt to income issue with a house in a high risk flood zone, consider walking them to a house down the street. I'm not talking about flood zone. I'm talking about getting them down away from what could be a legitimate flood insurance cost issue. Contingencies, we talked a little bit about that. When I first started doing this, nobody had contingencies about flood in the contracts. Then people like Karen Gaskins wanted to put in contingency, like depending on a acceptable flood insurance cost. And now people are arguing over flood insurance contingencies. So talk to your managing broker and figure out how to do that. Be careful with slabs. Like I said, I don't want to sound like an anti-slab guy. It's just that slabs can be in older neighborhoods, can be a problem when it comes to flooding and flood insurance.
Is that why they build them on elevated slabs?
Yeah, and that's why now you'll see houses being built now and they elevate the grade and then they elevate the slab. And they
So slab on grade is gonna get way different flood insurance than an elevated slab.
Yeah.
Because I know with the crawl space and it's all in how the water can flow through it.
Right.
So it affects that. That's why you put the flood vents in.
Yep.
Which allows water to pass through.
Yeah, what flood vents and most mitigation concepts, and this is where it's going to be interesting for me. There's nothing sexy about mitigation. If people got $5,000 to spend, they're going to go to the Bahamas before they put in flood vents. What most mitigation projects are meant to do is manage what's called hydrostatic pressure. And hydrostatic pressure, the easiest way I can explain it is you have one of those big bottles and you're pumping it up. And as you pump it, because you're going to spray fluid, as you pump it, it gets harder and harder to pump, right? And if you pump one time too many, it blows the cover off the bottle. Well, when Florence hit New Bern and all those historic preservation homes, you've never been to New Bern, it's a beautiful little town. And all these old homes, their basements and everything fill up with water, their crawl spaces fill up with water. One of my clients who stayed there during the storm had to go to the second floor of his house because the water was so high. He said it sounded like an artillery barrage because the hydrostatic pressure was just blowing out foundation walls and the houses were falling over. And so when you put in flood vents and you fill basements and you do other things, I mean, basements, when they fill up with water and hydrostatic pressure, they literally will start cracking around the foundation. And then you got a $100,000 project that you have to fix because you're not gonna be able to sell the house because it won't pass inspection. So managing the hydrostatic pressure manages the integrity of the structure, which reduces the cost of future storms, reduces population displacement. I mean, New Bern lost 20% of its population within 2 weeks. The University of North Carolina says it'll take them 20 years to recover from just that. And I will tell you one story just real quick. There's a client I have, his name is Hubie. Hubie does really well in life. He's got a multiple $1-million house on the New Bern River. And he calls, he got referred to me and says, my house is a wreck. I pull up in front of his house and it looks just fine. Yeah, okay, I'm sitting there looking at the front of the house. He pulls up in his car, he goes, come on. He opens the front door and there was the nose of a 45-foot yacht. That yacht had come from 3 miles away. And just to give you that yacht needed like 8 feet of draft and ended up in his house. That's how high the water was. And we had to wait.
Does he get to keep the house?
Yeah, finders keepers, right?
We had to wait 2 weeks for the land to dry enough so that they could get the cranes and everything in there. And then the main crane that lifted the boat was on a barge. And so they had a crane in his driveway that helped move it out. And then they had a crane on a barge that was actually picking it up and moving it back out to the water. And they had to, and the Newburgh River is not that deep. And so they had to literally put it on a barge to float it back down the river. So it's kind of crazy, but anyway, someone posted on Facebook the other day, said, if you had to have someone narrate your life and it wasn't Morgan Freeman,
Yeah.
who would it be? And I said, the guy from Allstate, Mayhem.
Oh, yeah, that guy would, yeah. That's wild. I'm from Pensacola, so you see like boats and streets, like really not that uncommon, but like a whole ass yacht.
My mom lives 45 minutes from Pensacola.
Yeah, we
She lives in Fairhope, Alabama.
Yeah, sure about.
Hey, Mike, so the claim thing, it says on that form, if paid out by the NFIP.
Right.
Now, if they have a claim they went through their insurance that wasn't paid out by the National Flood, does that?
What is it that what organization is it, or that insurance agencies report claims to? There's a third party. I forget the name of it.
I know what you're talking about, because that's how they find out if your client makes claims.
Yeah. So when you're dealing with the insurance sector versus the federal government, there's different rules. Okay.
For that document.
But that document only has to do with FEMA.
Only with FEMA,
And that's
so-
because FEMA is the only one who won't release the information.
Gotcha.
The insurance companies will release it to that third party.
So if they have made a claim on something that was not through FEMA.
The private sector provides the information.
So let me ask you a question about it, since we're on that form right now, the DPOR form. So is that now, and you're talking to the people that actually wrote the form and got it in place, because you've been talking to them, is that now a required disclosure?
Yes.
Okay, so we have it as a real estate community here. Has anybody heard Rain or anybody else say anything about a required disclosure for repetitive loss mitigation? Right? So everybody in this room and everybody on this cast needs to understand, download the form. And I mean, it's going to be, I think, along with noise and all the other ones, Rain should be requiring this to be filled out by your seller and then uploaded into Rain. So we have it to look at from the beginning. Now, like he said, it doesn't mean a whole lot, but it's now a required form, so we need to start using it.
Well,
Let me put it.
This thing for one, make any.
Well,
Well, it was on Real Estate Agent Mastermind.
Yeah.
Somebody put it up on Real Estate Agent Mastermind, and I saw the form, and I'm like, what the hell is that? So I pulled it up and started looking at it. I immediately called Mike and said, is this? And he goes, wait a minute, they did it? Because he was involved in trying to get something like this done. So they even slipped it in behind him. So this has been something that just kind of got done. It's a standard case of people doing stuff and not telling anybody.
Maybe we weren't even understanding it.
I was gonna say, I think VPAR did tell, so I'm part of VPAR, and they did tell us.
Okay,
see,
well,
this
tell Ray.
to me, this to me is not a federal government form. It's not state legislature, it's DPOR.
Right.
Okay, and DPOR is who manages the.
That's who we're all licensed under. So if our
Licensed.
license is under DPOR and they're saying we have to do it, then it's.
Here's where I see, the most important thing that I see about this form is protecting you, protecting your client, and protecting your company. If you get this document completed, you're safe.
Right.
Is because you, at least, I mean, part of when you get sued is determining how liable you were in not doing what you were supposed to do. Okay? And so with this, it proves that you did what you're supposed to do. You did the best you could.
Quick question.
The other moral of the story is just every single customer should get a flood quote regardless whether or not they're in a flood zone. Because that will help trigger some of the information needed.
Kind of online question.
Yeah, so they're saying, but the seller doesn't have to sign this if they say they don't know.
Well, but even if you.
Is that true?
Well, what they're signing it if they, let me,
So
where are my
the
glasses?
question from online was, if the seller says they have no knowledge, do they have to sign this form? So that's the question we're trying to
And
answer.
what's the
Does everybody
actual-
understand what the question
Can you read the
is?
verbiage?
So the Code of Virginia requires the owner of residential real property who has actual knowledge. Now, I guarantee you, actual knowledge is a legal term.
Yeah, I was gonna say that.
Okay. That the dwelling unit is a repetitive risk loss structure to disclose such fact to the purchaser. So the only one, you only need to sign this form if you're disclosing that it is a repetitive loss structure. So if it's not, if you don't know if it's a repetitive loss structure, and you have no actual knowledge, then you're not required to fill out this form.
So what is actual knowledge from a?
Well, I think it's something like
Yeah.
you yourself have it right, or something not like.
Yeah.
So,
today.
well, if you go back to my story about the two kids in the Coast Guard,
Yeah,
they didn't have any actual knowledge.
right, how would?
I mean, they did when they went to put that on the market, but
Right.
there was no actual knowledge provided. That might have protected them if the previous owner, there had been some mitigation work done to that house.
It is
So-
in incident.
So,
I would say actual knowledge would be to
Have filed the
claims-
flood claims.
two claims
But it's
filed
not-
by the current
Yeah,
owner.
but one claim does not make
Hey,
it.
Mike, that letter.
Right,
that
so it's
says
two
it's
claims
to,
by the current owner.
I think you're right, I think it's gonna end up like a lead-based.
Unless they do
But
it.
Construction requires 70 days to sign it.
But that's not actual knowledge for lawyers, unless they've
Hey,
actually
guys.
taken a claim
The
themselves.
letter that said.
everybody, if you're asking questions,
Get the flood insurance information, can you give us a boilerplate or put that on your site or something?
You mean as far as previous history?
Yes.
Yeah, I can. Like I said, it's, if you just Google the National Flood Insurance Program, NFIP, the 800 number comes up.
they can't.
I know they know, but you're saying that we should actually send a letter registered, blah, blah, blah.
No, what happens
Cover
is,
your ass.
Hey, Mike, can you repeat the question so that the people online know what you guys are talking about?
yeah, so what
When
he's asking,
when they ask a question, they can't answer, just repeat the question. So
what he's asking is, how do you go about, getting the information about previous flood history from FEMA? And what I was saying earlier, depending on who answers the phone, could be a different answer. The most strict methodology is having to write a formal letter and having it notarized by someone on behalf of the seller.
Right. That's what I'm saying, but that should be a boilerplate, because calling is like calling the IRS. They'll give you an answer, but they don't guarantee the answer's right, and it's a.
Yeah. What I'll do is, I'll come up with the methodology. That's a good point. And I'm rebuilding my website.
Okay.
I own floodinsuranceusa.com and I own the trademark for floodinsuranceusa.com. I'm gonna keep Flood Insurance Hampton Roads as the DBA, doing business as. So everybody in Hampton Roads will continue to know me as Flood Insurance Hampton Roads. But it's very hard to do business in Florida.
Right.
People go, who the hell is Hampton Roads? So,
That was an online question.
yeah, go ahead.
But
But anyway, I can put it on the site.
Okay, thanks.
I think another issue is who would be liable if this new form isn't done correctly. So that's maybe a program.
So that's a really good point. And if you're the agent filling this out, you better be schooled on it. And that's why we have these classes. But I was looking at this form again, Mike, and you're absolutely correct. This form is only required if there's repetitive loss of house. So as a listing agent, one question that you should always be asking is, are you aware of, or do you have actual knowledge of repetitive loss due to flood on this house? And if they say, well, yeah, we had a claim, or whatever that is, then you are then required to fill this out to disclose to a potential buyer. So it's just a question you're going to have to start asking. And I don't know, even if it was me, I might even take this and say, no, there's not, right? There's not a repetitive loss. I might run seller says no actual knowledge of repetitive loss, have them sign it, just put it on file. So you can actually say you asked the question and this is what you were told, and that protects you as the agent. That you can't help it if they lie to you.
Can I also bring up an important point? As Carrie brought up earlier, there was a house that was in a low-risk flood zone that was a severe repetitive loss.
Right.
Okay, so you might even consider asking everybody, when you're doing your fact finder, what school system do you want? How many square feet? You're doing your fact finder, you say, do you have any flood history due to a weather event? There is a difference between a flood history of a pipe bursting Because that's homeowners.
So
Okay,
what does this, okay, we already have something in real estate that covers this. What, do you anybody know what it is? There's a history of repetitive loss of the property. What would that be
what's
considered?
it say?
Is it 2 or more losses?
2 or more losses is repetitive loss. 4 losses is severe repetitive loss.
It would be considered a latent defect.
Blatant defect.
2,
Would you mind writing the definition of severe repetitive loss again? The definition is confusing online.
okay, the definition of repetitive loss is 2 claims of any amount. This form-
10 years.
In a rolling 10-year time frame. This form is only if the claims have been more than $1,000.
And that's severe.
No, that's repetitive.
Okay, that's repetitive. Okay.
Okay, severe repetitive loss is 4 claims of any amount or 2 claims that exceed 50% of the value of the structure, not the property, the structure.
So is that written in that DPOR form?
No, that, because that's not asking about severe repetitive, it's only asking about repetitive.
If you're
So-
repetitive risk loss, if you have a severe risk loss, then I think that automatically is gonna make you.
That's good. Severe repetitive loss automatically makes you a repetitive loss. Repetitive loss is 2 or more
But
claims.
that form doesn't define that.
Yeah, no, it doesn't define it. It just says repetitive risk loss and it's in quotations. So whatever they meant by air quotes, I don't know.
Is it-
Here's where- Here's, let me tell you what I recommend, okay?
Like it's not a real thing.
Yeah. So what Kenny and I talked about, let me tell you what I recommend. This is a flawed document and it's a flawed process,
Right.
but it's a good first step.
Yeah, now we're
Okay.
talking about it.
So the only way it's gonna get better is if you guys funnel information to Kenny, the state legislator in your area, whatever it may be, y'all are gonna need to point out the flaws concerning practical application as it occurs. True?
True.
So if somebody buys a house, and sells it 2 years later, no flood in that one, but it's going back 10 years, right?
And they don't know about it, and they don't have actual knowledge.
And I don't know jack shit about it.
They don't have that, they don't have actual knowledge.
It's basically, the
Yeah.
story says, like, those Coast Guard kids would not be helped by this form, because the repetitive loss was when they weren't even alive, so no one was there to tell them about it.
But
Right,
people
and
might think this is version 1 of probably.
Well, that's,
it.
that's.
Let's,
exactly-
hold on a second. Let's talk about actual knowledge for a second, because that's kind of, let's talk about actual knowledge, right? You go on a listing appointment, right? You're responsible for everything that you have as the real estate listing agent, you have actual knowledge of, right? So if a seller doesn't tell you that he has, rats in the attic, you're not responsible for disclosing that to anybody because you don't have actual knowledge. This is the same thing here. If a seller doesn't have actual knowledge, and he won't have actual knowledge unless he requests the information, right? That's why I said earlier, if you're a buyer's agent and you're worried about it, make it contingent that the seller provides you with the flood report from FEMA. Now the seller will have actual knowledge and then he would have to do this. People are gonna lie. All you can do is ask the question.
Let me tell you another secret, and you probably forget this, but try not to. If there's what we call write your own providers, okay? We call them WYOs. And they're basically third-party companies that are between FEMA and the agent. I write most of my flood insurance through a company called Assurant, which is still a FEMA policy, okay? It's still a FEMA policy, but Assurant gives me better software, they give me better service. I give up a tiny fraction of my commissions, but I'm getting better service from my clients as well, okay? So if you ask somebody for their flood insurance policy, and it's direct, it'll say FEMA direct across the top. Okay, most people don't have flood insurance directly with FEMA unless they have it. So that's an alert. Okay, if you see with my policies, it says Assurant across the top.
Right.
And then down below, it says this is a National Flood Insurance Program policy. But when you see the eagle, that the Homeland Security, and it says FEMA, that's an alert, okay? That alerts me that why is, and I'll ask people, why are you dealing directly with FEMA? Because most people who are repetitive loss properties know it. Okay, because they can tell by the premiums, they can tell by who they're dealing with. However, as the federal government is, stuff falls through the cracks, just like with those two kids in the Coast Guard. And they had been a severe repetitive loss for years, but when they bought the house, USAA didn't catch it. And so,
So the question on here is homeowners, the homeowners move every few years. So like your Coast Guard horror story there, if they were selling their house and they, right from the start, or the people, and they had never knew was flooded, they could legitimately sign this form saying, hey, I have actual knowledge of this form.
yes, exactly.
You don't know.
The person that sold them the house may not have had any actual knowledge, because the last claim, the claims that occurred
So long.
it happened like in 2003 and 1998. So I mean, like I said, the kids weren't even born, when the house flooded, and yet they got sacked, 20 something years later. So, I mean, I haven't had that happen very often. But, and since I've been doing this for 12 years now, and I've got thousands of policyholders, and I've designed over 1,500 mitigation projects, you tell me a zip code and I'll tell you whether we have a problem.
Yeah.
Mike, thank you for being here today. Everybody that was online, thank you guys for being here. I know class ran a little long, we got started a little late, but I think this is a really important subject. I tell everybody, when you get into real estate, we have this in your first couple of years in real estate, it's like you're trying to learn everything you possibly can. And then it seems like we get caught up in just doing real estate and selling houses and making a living and running a business. And we should always strive every day to be a student and be a knowledgeable in real estate and understand what's coming down the line, and always trying to educate ourselves further and elevate our knowledge and our understanding of the real estate as we go along. That's the only way we get better as a community. And there's just too many of us that we quit doing that. Every day is a school day, and we should always look at it that way.
And I have one thing, I'd like to tell people this, and I forget all the time. I have two rules in my business. I've been doing business now for over 40 years. I've built several businesses and sold them. And over the years, I've consolidated and made things really simple, because simple works best. And my two rules are: make it easy to do business with me and protect my clients. And the thing that makes it hardest to do business with people is lack of knowledge. You can make it really easy to do business with you if you know what you're talking about.
Mike, there was another question online, and that was, did you say that assurance is a FEMA-backed policy?
It is a FEMA policy that's written through assurance.
Okay, it's like a subcontractor for FEMA.
Yeah.
Gotcha. All right. Guys, any other questions for Mike or me or anybody else in general? I do hold a weekly Zoom class with all my agents, and we talk about the market, and we always talk about something on the contract. If anybody ever wants to join in, you're more than welcome. Just let me know and I'll get you a link. Guys, thanks for being here.
Thank you.
Thanks, Mike.